All right, let's get Brijen Puri, head of markets at JP Morgan, with his take on what's been happening with the currency markets. Brijen, hi, morning. Just a while back, it looked like 58, 59 was, the new fulcrum for the currency market. We've seen a bit of a weakness all of a sudden now at 60 half. Macro factors have also not supported. What's your call now? Are we in for some more weakness, or should it take some support now at current levels?
Hi, morning, Anuj. I think post-elections, we saw virtually a straight-line rally across all asset classes related to India, and some amount of correction was due. I think just a catalyst was what we were waiting for, in this case, the Iraq situation. Having said that, the fundamentals still remain fairly strong, so I don't think the long or medium-term picture for the country has changed. From where we are, can we expect further weakness? I think if the Iraq situation escalates and we see crude inching towards 115, 120, it could worsen a bit for the currency. However, my personal take is that if for investors with a longer-term horizon, carry adjusted, we are at good levels for them to start entering. This could be both exporters looking to hedge receivables or longer-term investors looking to invest in India. 60 half, 61 are definitely good levels to enter, especially with the levels of forward premium that we have at the moment.
Okay. Brijen, if Brent does spike to $115 to $120 per barrel, then where do you expect the rupee to possibly go to as a near-term reaction to it?
See, I think, let's say at around 120, can we see a 62 on the rupee? I think that's definitely possible. But given the RBI reserve build-up over the past few months, and the fact that the RBI has been fairly active in managing the currency, as well as the experience of last year, where we saw what a runaway depreciation for the country can do, I think the RBI would be looking to backstop at some levels, looking to reduce volatility on the way up. Apart from that, fundamentally also we are in a much better situation than we were earlier. People are better prepared. Our current account is looking better. Fundamentally, people are, the situation in the Middle East, people are fairly confident about the economic recovery over the coming few years. So given all of this, I think while we could see short-term spikes, they should be well contained either on investor interest or by RBI supporting it in the interim.
Brijen, what's the fair value of currency according to you? Do you think we are pretty close to fair value in overvalued zone or undervalued zone? And what would be the level or the range for the currency going forward?
I think different estimates are out, but based on the speeches from RBI officials, around 60, 61 or somewhere in that region is where we should be at fair value on the dollar rupee, and therefore currently we should be around that. A couple of percent on either side of the fair value, the RBI would be okay with it, given the demand supply and the flow mismatch. But if it does deviate materially, as we saw on the downside, 58 half, 59, we saw the RBI looking to reduce the volatility on the downside. Similarly, at around 61 half, 62, we should definitely see RBI increase in aggression. Anecdotally, we have seen the RBI looking to cool down the market both yesterday and today also.
Okay. Brijen, I'll just come to the RBI intervention in just a bit, or the level that maybe the RBI would be comfortable with. But I just wanted to ask you about the demand-supply mismatch. So, for example, the rupee itself has depreciated, say, close to 2% since last Thursday, since Brent crude started spiking. But how much of the recent rupee depreciation is because of Brent crude spiking, as well as because of the demand-supply mismatch, simply because flows have dried up on the debt side?
So I think, really for a current account deficit country, we do need a couple of $1 billion, depending on what current account assumptions we are making every month, just to stay flat. over the past month or so, we had seen an accelerated pace of inflows both on equity as well as debt. Apart from that, there were also probably some speculative flows on the currency. Those have dried up. Also, probably on the speculative flows, we may see some people take some positions off the table at current levels for the short term, though I would think for medium-term investors, I repeat myself, these are probably good levels for them to look to start re-entering.
Okay, do you expect any sort of easing of the FII debt limits in the gilt market?
I think given where we are, we could see the RBI look to increase the debt limits maybe by 5 billion or so. However, given that the corporate limit is fairly underutilized, there is no real pressure on the RBI or the government to ease the debt limits yet. It may make sense for them to wait out a bit and get foreign investors into the corporate bond segment also.
Okay. And what would your range, at least for the bond markets, be in the near term, especially in the run-up to the budget, and now we have multiple cues coming in from the geopolitical instability as well?
I think, like on the rupee, on the bond market too, around 875, 880 is definitely very good levels for a medium-term investor to start looking at India. We don't see any rate hikes on the horizon immediately. Unless we see material worsening of the Middle East situation or a blow-up in, or rather a poor budget and a poor monsoon, I think we don't see RBI hiking rates. We will probably look to see RBI maybe supporting the government easing towards Q1 of next year.
Okay, so you see a status quo from the RBI, the entire fiscal, the entire 2014, you're saying?
Yes. I don't think the RBI would be acting because while we do have base effects on inflation, RBI has already cautioned the market on reading too much into moves just on the base effect. I think they'd be looking to see how the government budget plays out, as well as the potential measures which the government is looking to take to ease the supply side constraints, especially on the food front, which is what the WPI number also kind of indicated, that that's something which needs to be tackled immediately.
Okay. All right, Brijen, we leave it at that. Thank you very much for joining in with your views. So that is JP Morgan saying that at least in the near term, they expect the rupee to be around 60.5 to 61, and the yields could actually be in a range of between 8.75 to 8.80 in terms of further hardening. That is what we could expect on the bond markets. But